Hello there, welcome to the MythPod. Every year when the union budget is announced, it can feel like a lot. So today we are going to cut right through all that noise and can give you a clear, straightforward breakdown of India's 2026
So, what's the
budget.
big idea here? What's the master plan in India's 2026 budget? We're going to unpack all the key announcements, go way beyond the headlines, and really get to the heart of the vision for the country's future. We'll look at what it means for the economy, for businesses, and of course, for you. All right, here's how we're going to break it all down. First, we'll set the stage with the economic backdrop. Then, we'll dig into India's huge growth blueprint. After that, we'll talk about powering up manufacturing. Then it's all about jobs, skills, and people. And to wrap it up, we'll get into the tax and money matters that affect all of us.
Okay, let's dive right in. First up, the economic backdrop. You really can't understand a budget without understanding the world it was born into. So, what did the economic stage look like when this whole plan was being put together?
Well, the good news is, the latest economic survey paints a pretty resilient picture. Public finances are actually getting stronger, with government revenues reaching about 9.2% of GDP. This gives the government a really solid foundation for all its ambitious plans. And look, this isn't just about balancing a spreadsheet. It's about having the actual cash, the firepower, to invest in real, meaningful growth. And that's not all. The unemployment rate has been falling, which is a fantastic sign. I mean, it dropped down to 4.8% back in December 2025. And that's a huge deal, because more people working means more money in pockets, which means more spending, and that's what really keeps the economic engine humming. On the world stage, India is also looking pretty solid. The country's external buffers are strong, and that's thanks to record exports and really high foreign exchange reserves. Think of it like a big financial cushion. It helps protect against any shocks from the global economy and gives the country a lot more wiggle room to make its own moves.
Okay, so with such a solid foundation, what's the big plan for growth? Well, the government is placing a massive bet on one key area to really supercharge things. Let's get into the big numbers.
And here it is, the headline number, a staggering 12.2 trillion rupees. That's the target for what's called capital expenditure. Now, what does that actually mean? It's the money the government is planning to spend on building things that last. We're talking roads, ports, railways, the very things that will power the economy for decades to come. And to really put that number into perspective, that's nearly 4 times the capital spending from just 8 years ago. So this isn't some random one-off splurge. It's part of a long-term, accelerating push to modernize the country's core systems. The strategy seems pretty clear, right? Invest in the foundations, and the private sector and the wider economy will build on top of it. So, where is all that cash actually going? Well, think about some seriously game-changing projects. We're talking 7 new high-speed rail corridors, new freight corridors to speed up logistics, like the one from Dunkini to Surat, and even getting 20 new national waterways up and running. Plus, there's money for city economic regions and a huge 20,000 crore investment in carbon capture projects. It's a massive overhaul, and you'll see how this all connects to the manufacturing ambitions we're about to discuss. Okay, but the big question is, how do you pay for all of this? The government is targeting a fiscal deficit of 4.3% of GDP. Now, in simple terms, that's just the gap between what the government spends and what it earns. The fact that they're trying to keep that number manageable, even with all this massive spending, is a really strong signal that they're serious about long-term financial stability.
Alright, that brings us to our next big topic, powering up manufacturing. You see all that infrastructure spending we just talked about? It's all connected to this huge Make in India push.
And this whole manufacturing push didn't just come out of nowhere. A pre-budget survey from Asacham showed that industry leaders were basically calling for a stronger push to domestic manufacturing. It was their #1 priority. So it's pretty clear the government was listening. And here's how they responded with this 4-pronged strategy. First, they're launching a Semiconductor Mission 2.0, super high-tech. Second, they're boosting container manufacturing with a 10,000 crore rupee scheme. That's a really practical move to smooth out logistics. Third, they're establishing rare earth corridors to secure critical materials. And fourth, they're reviving 200 legacy industrial clusters. It's a really comprehensive plan to build up that domestic muscle. And the firepower doesn't stop there. They're also pumping 10,000 crores into a biopharma Shakti scheme, doubling the money for electronics manufacturing, creating a new growth fund for small and medium businesses, and setting up massive textile parks.
The goal is pretty straightforward, right? Make more stuff in India and rely less on imports.
Okay, so we have talked about huge infrastructure projects and big industry, but what about the people? Because at the end of the day, all this economic growth has to translate into better opportunities for individuals. So let's talk about the jobs, skills, and the investment in the human capital.
So, one of the biggest new initiatives is this E2E committee. That stands for Education to Employment and Enterprises. And what is it? It's a new high powered group whose whole job is to unlock the full potential of India's services sector. I mean, that sector is a massive engine for the economy and jobs, so they'll be looking for new ways to grow it and make it even more competitive on the world stage. And the goal here is wow, it is incredibly ambitious. They want to increase India's share of global services exports all the way to 10% by 2047. To do that, the committee's going to have to figure out where the new growth is and really understand how things like AI are going to change the future of work. This is really about future-proofing India's workforce for the decades ahead.
And there are a bunch of other key initiatives for people too. For example, they're training 10,000 new tourist guides. They're setting up 3 new All India Institutes for Ayurveda. They're establishing She-Marts to empower women entrepreneurs. They're even creating content creator labs in 15,000 schools and boosting mental health care with a new institute. It's a really broad, holistic approach to human capital.
Alright, let's get to the part where everyone's probably waiting for tax and money matters. How does this budget actually hit your wallet? Let's break down the financial impact.
Okay, so one of the biggest headlines that got everyone talking was the hike in the Securities Transaction Tax, or STT. If you're into stock market trading, you know this one. They've increased the tax on futures and options trading. Basically, it just got more expensive to trade these instruments, and that could have a real ripple effect on market activity.
And yeah, the market did not love that news. The reaction was swift and it was clear. We saw the benchmark indices fall over 1% right after the announcement. It just goes to show you how sensitive investors and traders are to any increase in their transaction costs.
But hey, it wasn't all about tax hikes. There were some other key changes too. For instance, the tax collected at source, or TCS, on overseas tour packages and for education and medical expenses was actually reduced to 2%. They also extended the deadline for revising your tax returns, and in a big move to attract more foreign investment, they hiked the limit for persons resident outside India from 10% to 24%. So, definitely a bit of a give and take there. So, what's the final takeaway? This budget charts a really ambitious course for what's being called a Viksit Bharat, or a developed India. It's a massive, multi-trillion rupee bet on manufacturing and infrastructure to fuel the country's future.
But the big question remains, will this big bet actually pay off for everyone? I guess only time will tell.